Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Woohoo! We need a break this weekend. It's March 8th, and we got a couple economic news releases scheduled for today. The all-important non-farm payrolls for the month of February. We had a revision downwards to 119,000 for the month of February, or month of January rather. It was a forecast of about 160,000, but I think with the ADP, there were some whispered numbers closer to about 200,000, and they got their wish and then some. It came in at 236. So good jobs numbers that came out there. And then we got the unemployment rate to follow. And back in January, we figured it was at 7.9. We figured forecast was to remain the same. And it dropped to 7.7. So as a result, obviously, Wall Street's liking these numbers. It sounds positive, but be cautious because the 7.7 is actually pretty deceptive. If you kind of look at go behind the numbers, you'll actually see that there is about almost 300,000, which came into about 290,000 people that actually stopped looking for work. So be cautious with these numbers. Take them with a grain of salt at times, primarily because they can be very misleading. When it comes in there, they're also taking into account that you have young people like 16 years of age grabbing part-time jobs, or people working part-time but are looking for full-time. It doesn't take into account a lot of these numbers there. So a lot of people are still looking for work. A lot of people want to work, but some people, we've had people out of work for over 6 months and just plain simple stop looking for work. And this is the longest time period on average that people have been looking for work since the Great Depression time period. So still a lot of stuff out there that you need to be cautious of. So we'll jump over to the bond market and take a look, see how this is all affecting the interest rates, and dropped dramatically. So the bond market, how this is how it's affecting the bond market. It's going into the stock market, but stock market's not doing a whole lot because there is also concerns on the back of their mind that maybe the Fed might stop the quantitative easing much sooner than they anticipated. So they kind of like having that money being put back into the system and buying these mortgage-backed securities, which is what's keeping the stock market going. So with that in mind, bond market's kind of tanked quite a bit today. So if you notice, we've had quite a few very large opening gaps right here. If you look at within a 3-day period here, we're up here close to about 103.40ish range, and now we're down to about 102.22. That means we're basically at about 1.25 points difference between a no point, and now it's going to cost you about 1.25% for that same interest rate. So that over a 3-day period here. Okay, so this is kind of what we're facing here. I did come out with another chart here for you to see. I want you to take a look at it. And here's kind of where we've been at since December here. We've had this kind of downward trend, as we can see here, which means we've been in the mode of rising interest rates. A lot of it has to do with the hot market that's going on in the equity markets. It's the longest period since they've one of the top 10 longest periods without a 10% correction, which is over 500 days. This is covered since about December, and you can see how much of difference we've had. We were actually up at around 105, pushing even 160 if you go back a little bit further, pushing at 106 range, and now we're down to about 102.22. So that's about 3 to 4 points we were actually down in pricing on these. So the good news is, however, because with these trend lines here, we're towards the bottom of this trend line. We have room to go upwards and close these opening gaps we've had. So if you were looking to, if you're if you have not yet locked in, you could potentially protect yourself and just go ahead and float at this point, as we pretty much are at the floor of this. All right. Hope you guys have a wonderful weekend, and enjoy the weekend. We'll see you guys on Monday. Thanks for watching.